Let's go talk about lockdowns. We know that Shanghai is scheduled to come out of its lockdown.
Yeah.
Do you believe that we're going to be able to go and have a full opening
Yeah.
in that economy without Omicron flaring again?
Yeah, sure. So I mean, the idea of controlling Omicron is actually quite odd, right? I mean, from people outside of China. But the reality, however, is that in a place like in a city called Shenzhen, which is next to Hong Kong, vibrant city, the economy is bigger than Hong Kong now, actually, Shenzhen. So they actually locked down, and then actually now is sort of able to control Omicron. And the way they've been doing that is actually to do PCR testing on a regular basis. So people who wants to leave their home and go to shopping malls or go to work, they've got this app, and then they basically get tested twice a week. And if they can show this basically a pass, the zero or negative test PCR, they can do whatever they want. And then sometimes things happen in China that's a bit different. They are having these PCR testing sites every street corner, so people just go and get it done. And I suspect the same model or very similar model is getting rolled out in Shanghai and Beijing to actually allow these cities to go back to a semblance of normality. It won't be 100%, but it will be better than people kind of go out and do normal stuff.
So how do you play that as an investor? Because you're sitting there and it really suggests that China is going to still remain a bit of a hermit kingdom because you won't be able to go and have people come and travel in and out of the country without risking more flare-ups again. So as an investor, what can you get excited about in China at the moment?
Okay, so the Chinese market has come off a significant amount. And so there's actually a lot of strong companies in there that we've been doing a lot of work on, to actually take advantage. The overall thing, over many years of investing in China, there's three cycles that I think we should be focused on. One is the regulatory cycle, crackdowns and reforms, which are typically bad for companies, but ultimately good. And the monetary cycle, when things get a little bit hot or they want to reduce debt, they tend to tighten up. And the third, so monetary cycle, regulatory cycle, and the geopolitical cycle. So geopolitics, I think, just continues to be where it is, which is not great. But in terms of the regulatory cycle and the monetary cycle, I think both of these cycles, in terms of tightening, has clearly peaked. And so the authorities are worried about the economy. They're worried about the social element of it, the political element of it, and they're actually going to relax in both the regulatory and the monetary cycles. And as a result, given the cheap markets, there are actually lots of opportunities. So we're selectively going through them to look for the best one that can do well over the long term.
Are you looking for growth stories or are you looking for cyclicals? Because you're talking about cycles. What areas are catching your interest at the moment?
Yeah, sure. So we actually like growth in China because there are elements of it which will grow in the long term. And clearly, most people talk about consumption and the internet. Yeah, we're looking into that as well. But really, the more interesting stuff are things which actually are improving in technology in China. Company which are actually climbing the technological ladder to displace imports, and those things will not, get negative impacts from regulation cycle in the next 3 to 5 years. They're going to grow 20, 30, 40% a year, and at the moment, some of them is on 20 times PE or something like that. So there are specific examples that we are focusing on, which is a little bit less obvious than what most people look at, but I think those are actually the better stories in the long term when it comes to China.
What about the decarbonisation story in China, just to go and finish off? Is there anything that is really interesting at the moment that could go and present opportunities longer term?
Yeah, sure. That story is also very interesting. The reality is, China is investing a lot of money in renewables, partly because they're actually one of the world's lowest producers of a lot of alternative energy products, including hydrogen. So there are lots of things to look at there, but we're very cognizant of valuations as well. They've come off a bit. It's just the question for us is, is 40 times PE worth paying for this kind of stuff? They used to be like 80 times, right? So it's come off, but is it cheap enough? So we are keeping active watch on those names. Yeah.
Dr. Joseph Lai from Ox Capital Management, thanks so much for joining us on the program yet again. Looking forward to the next chat. Might go and get some more ideas there for the Chinese market in particular.
Thanks very much.